Good day, ladies and gentlemen. So in this video, I'll be teaching you a powerful strategy that you can use to make money in the forex market. Okay. So without further ado, let's get right into it. What do you need for this particular strategy? You need to be able to identify two patterns. All right. The very first pattern is a level where you have candles moving sideways, and just more or less like consolidating it. Like the candles are finding it difficult to either go upwards or downwards. Okay. So you just have a few candles in a tight range. When you see this happening, then all of a sudden price moves in a specific direction. Just know that this level is a very strong level to trade from. That's the very first pattern you need to identify. So the second pattern is where you have a very strong resistance or a very strong support. Let me just use resistance to explain. So price happens to be finding it difficult to go beyond the particular level, then all of a sudden it pushes aggressively beyond that level. Then this level is going to be a very strong level from which you can buy from when price returns back. Okay, so remember the two patterns. The first pattern, you have candles just struggling. The candles are going to be going sideways. Sometimes it won't be perfectly sideways. The market is not 100% perfect, so sometimes it might look a little bit slanty. You could have something like this, a little bit slanty. You have your candles just in a very tight range around that region. You understand? So you just have that tight range. All you just need to know is that you're going to see aggressive move from that particular level. That's the main thing that matters. You see an aggressive move that goes past the level that it seemed as though price was finding it difficult to go past. So a few examples are going to make it a little bit clearer for you to understand. Okay, so let me go into the examples now. Let me zoom out a bit. So look at this. What do we see happening around here? You can see that this is the first pattern, the first type I talked about. You see candles moving in a kind of sideways manner. Okay, so if you look as if it's ranging, as if there's a tight range, you understand that the candles are kind of following, and all of a sudden you see a set of candles or a big candle breaking that particular tight range. All right, so all you just need to do is let me get some horizontal lines. So excuse me, you get these horizontal lines and you use it to mark out the boundary of the tight range and expect to actually take a buy trade when price returns to this level. So let's see what happened. Price didn't get here right here. So what do you see happening here? Price tapped into that level, respected it, and gave us a buy trade. So this is our very first example. So you need to look out for these things on your chart. So I have another example right here. Let me zoom out a bit. Okay. So look at this. You can see this candle is moving sideways as if it's finding it difficult to actually go up or go down, just moving sideways like this. Then later you add an aggressive break in the upwards direction. Okay, so once you have such aggressive break in the upwards direction, then all you need to do is to wait for price to come back to that level. So you can mark out that range like this. So you simply wait for price to come back to that level, then you take a buy trade. Okay, so you see that, take a buy trade. Now do not make the mistake of thinking this this break in the downwards direction is the right break for you to trade. No, one thing I usually tell students is, if you want to use this system, make sure price has actually gone very far, not very far, but it should go considerably away from that tight consolidation, because manipulation could occur. You understand? Don't forget AMD. Sorry, don't forget AMD. Okay, they could use AMD to take your money. All right, you've mastered the fact that after an accumulation phase is an expansion phase. You understand? So instead of they moving from accumulation to expansion is also known as displacement. Okay, so instead of moving from accumulation to displacement, they put in manipulation in the middle. So you have accumulation, you have manipulation, and distribution. Sorry, distribution rather. Distribution is also known as expansion. So when price distributes, it simply means it expands in a particular direction. I'm breaking down the details for you to understand. So normally, normal market movement is supposed to be from accumulation to distribution. But because of market makers, we have manipulation. Market makers will always want to manipulate the price from time to time. Sometimes manipulation is not there, they just move the right way, accumulation to distribution. Okay, so now the secret, what I'm teaching you is that after an accumulation, or you have a tight range like what you have here, you're supposed to have a distribution, meaning price is supposed to displace in a particular direction. Now you're taking advantage of that, waiting for price to come back to that level where you had the accumulation in order for you to actually enter a trade in the same direction. You understand? That is what I'm teaching you right now. But the thing is, the market makers understand this model. So they put in manipulation in the middle. And what is the manipulation? Once the accumulation phase is done, instead of this distribution, instead for distribution to take place in the direction the big banks and the big players want to move, what they will do is they will move in the opposite direction. But the thing is, they won't move in the opposite direction for a long while. They are only doing that to manipulate you and I. You understand? So they move it a bit. You can see the way they moved it. They did not move it too far. This downwards movement was just what I call manipulation. They manipulated downwards, making you think the correct direction is downwards. So someone that does not understand now will mark out this price range, which is what I've marked out like this, and we'll be looking at this candle as a breakout candle. So when price returns to this level, the person will be looking to sell. No, you have just been manipulated successfully if you do that. Okay, so one way by which you can avoid being manipulated like this is wait for price to move considerably away from that level. Okay, if it moves considerably away, most times it is not the manipulation. Okay, so it means they have actually distributed. So they don't go too far if they want to manipulate. You understand? They don't go too far. It's usually a bit short. Then the actual push is going to be the distribution phase. So you can't tell me that a move from here to here is a manipulative move. No, this is actually a directional move. This is the distribution phase. So it means this is the direction to actually trade towards. So I'll be waiting for price to come back here in order to take a buy trade. So let's see how we play that. So you can see price came back here and gave us a buy trade. Isn't that lovely? If you're getting any value from this video, please subscribe to the channel. That's the only way you can encourage me to keep giving you these gems. Okay, so let me show you something. I want to go back to the first example and show you how far price went. So look at this. This can be a manipulation move. It's quite big. Okay, so you can see how big it is. So price pushed aggressively here, confirming to me that this is the actual direction. So when price came back to that level, where did it tap in? I have to, okay, I've shown this example before, but I'm just trying to. So when price came back to that level right here, we took a buy trade and we made money from there. So this is the second example I just explained. Price tapped in right here and give us a buy trade. So I think I have one more example for you. Let's see. Okay, look at this also. So price was in a tight range right here. You can see this is what I was talking about. It won't always be perfectly horizontal. Okay, so you can see this one is a bit slanty, but you still have the same idea. Okay, candles just printing, in a sideways kind of fashion. All right, so I'll simply mark out that range, this tight range. I'll mark it out like this. Okay, and you can see price pushed from that level, and when it got back here, you can take your buy trade. You can see it gave us a nice buy trade from there. Still tapped in again right here, still pushed aggressively to the upside. Okay, so here's one more example right here for you. So what do you have here? You have a tight range right here, then price broke and moved in a downward direction. When it returned to that level, you could have taken a sell trade from here and made money in the downward direction. Okay, so this is one more example right here. You can see price consolidating, then it's pushed aggressively in the opposite direction. You can mark out that range like this. Sorry, a little bit of manipulation was done. Can you point it out? Can you point out the manipulation? So what do we have here? They move downwards from that range, fooling people to think the correct direction is downward. So you can't give me a candle and expect me to think that this right here is the distribution. No, I already know it's manipulation, so I would wait. Then this opposite move upwards is the actual move. So when price returns to this level, I'm taking my buy trade, and you can see what played out. If you are taking a buy trade right here, you would have made money in the upwards direction. Okay, I believe with these few examples, you've gotten the whole idea of what I want to teach you today. If you enjoyed this particular video, subscribe to the channel. You can share it with your friends. If you have a question, you can ask in the comment section and I'll do my best to answer. Thanks for watching this video. See you in the next one.